Am I live?
Yep.
Thank you, Joey. Good afternoon, everyone, and welcome to our YouTube live stream, Trending Thursday. Can you put that Trending Thursday?
Sure.
Can you do that? My name is Glenn Tompkins, Senior Instructor here at VectorVest. To my right, sitting side saddle, is Joey, my producer. Can you close my door, Joey? That would be nice. Say hi, Joey.
Hi.
Joey's in the background trying to make all this technical stuff go away. He's doing a lot of stuff in the background. Another perfect day, skiing all morning, Glen T in the afternoon. Ooh-wee, good afternoon. So, everyone who's typing in the room to let me know that you're here, by all means do that. To all the new people that are here, welcome. If you've never seen my face, well, it's etched in your mind now. But if you've never seen my face, now you can put a face to the voice. How many people are brand new? Let me know. How many people in here are brand new? I've been trying to get people to come to the live stream, but if you're brand new, just type a me in the room. If you are brand new, please type a me in the room, and that way I know that you're new. All right, so I'm looking at all the people that are here. Jay is here. Jay, and now everybody can see all the stuff that Jay actually puts up when he types into the room all the time, so we can see that. I got to take off my rings because Joey will have a conniption if I don't. Joey really is right now in a state of pensivosity. That's being pensive because he's trying to make a lot of things happen in the background. So, Narish is new. Paul is brand new to the live YouTube. Thank you for being here, Paul. Saborium, if you've never seen my face, it's too late now. There you go. Jake says, and that's Brian. Isn't that Brian? That is Brian. Yo, Jay. So, by the way, Jay, that's Brian. Up north, Brian. Boston, Brian. Jake is Boston, Brian. There you go. Tom is here. And there's Badger. Badger is Tom. Tom is Badger. So, that's just to let you know, so that everybody who knows, everybody in the Jockey Club, you can know each other in here as well. And Jay, watch what you type because everybody can see what you type. Everybody can see what you type, Jay. You're going to get us shut down. I don't want to have that happen. For those of you who are new, welcome to Trending Thursday. What is Trending Thursday? Trending Thursday is all about looking at stocks that are in the news, making the news. We look at them and look at other stocks that are in those industries within the news to see how they're faring. And we use the software to corroborate the story that it's good, bad, or indifferent. That's what we do. And at the end, I usually give some time to look at some of the stocks that you're individually trading or thinking about trading to put into the room as well. So as I can see, all of y'all now are just talking amongst yourselves, not even talking to me. That's fine. Go ahead. Y'all can all talk to each other now. I don't want to talk to you. So I want to talk to all my new people that are here. Really want to say thank you all for being here, supporting this venture that we have on social media. And hopefully you get to learn, about some of the stocks that are out there that you're not paying attention to. Well, maybe the stocks that you do have, how the news is affecting them along the way. Plural from you all to y'all. It's all about the same thing. Has this started yet? Jay, are you talking? What is that? Okay, there's Joey doing some Joey stuff in the background. By the way, for all of you who don't know, I'm a Duke fan. Here's my Duke cup where I drink my my Cafe Bustelo in. Joey is a Carolina fan, but I'm a Duke fan. Drink my coffee. Cafe Bustelo, the unofficial official coffee of Glenn Tompkins and VectorVest. All right. So what happened to Michigan? We pulled the bad straw because we're playing Alabama in our bowl game. Who wants to play a very angry Nick Saban in a bowl game? Not Michigan, so we'll see what happens. Job says, going to tell us about Boeing, which I got out of on a trailing stop this morning, though watching as it goes back up. I didn't put in Boeing this week. You'll see the stories that we're talking about this week. And I am going to introduce a new segment this week. Joey doesn't even know about it yet. But I'm going to introduce a new segment this week to keep you guys apprised of what's moving at all times. All right, so that's going to be something that we're going to do new here today. What we always start off with is what's going on in the market. Why? Because market timing is important. For those of you who are new, without the VectorVest software, market timing is key for what we do. All right. Understanding if the market is bullish, if the market is bearish, or if it's moving sideways, market timing is key so that you can invest on the right side of the market. All right. So we always start with the home page of the VectorVest software. Which one do I want, Joey? This one. All right. When you open up the VectorVest software, here's the home page. And we're looking at today's information. Our market timing gauge is pegged in the green. The color guard is bullish. VectorVest does advocate buying safe, undervalued stocks that are rising in price at this time. So keeping that in mind, today's a good day to buy. How else do I know that today is a good day to buy? Look at all of the major indices. The Dow is up 143 points for a percentage change of 0.5%. Notice across the board, with the exception of the VectorVest composite, everything's up very close to about 0.5%. But as a VectorVest subscriber, we do use the VectorVest composite as a means to timing the market because the VectorVest composite tracks the move of 82, almost 8,300 stocks. From that perspective, we feel that it's a better representation of the broad market movement. That's why we use the VectorVest composite for timing the market. And we can clearly... Oh, can I keep talking?
Yeah, you can keep talking.
All right. And then also on our color guard, all right, this is our traffic light into the market. A lot of green lights popping up. Still more yellow lights than anything. Let me check. 1, 2, 3, 4, 5, 6, 7, 8. So it's 9 green and 9 yellow. We're dead even. A lot of bullishness. Today is the first day in a long time. We've got 3 green lights across the top. The 3 indicators that are tracked in the color guard are the price of the VectorVest composite, which is tracking the 8,200 stocks that we track. RT looks at the short-term price trend in the market, tells me if the market is in an uptrend or not, cast on a scale between 0 and 2. Currently, we are above the value of 1. The market is officially back in an uptrend. And the buy-to-sell ratio, which looks at the overall health of the market, because every stock in our database gets a buy, a sell, or a hold recommendation. The buy-to-sell ratio looks at the relationship of buys divided by sells. Currently, we have more buys in the system than sells, so the market is showing signs of strength. As the market is moving higher, more stocks right now are becoming buy recommendations, taking advantage of the rally in the market. Now, with all of this being said, let's go look at what we call the market timing graph. This is the indicator that looks at that movement of the 8,200 stocks in the market. Let me go pull up my market timing graph. There we go. This is the movement of 8,200 stocks in one ticker symbol, the VVC, shown here in candlesticks. Most recently, over the last 3 months or so, what's the market doing? Definitely running higher. Now, do we have pullbacks in an uptrending market? Sure we do. But most recently, with today's activity intraday, we did hit a new intraday high on the VectorVest composite. We've pulled back a little bit since then, but nonetheless, a new high over the last 3 months. The market is moving higher. Good green open candle. Now that we have all of this information, let's find out from a news perspective what's moving the market. And Joey, that's not what I'm looking for. We'll start from the beginning. What are the 2 things that are moving the market? Anybody want to type it in the room? Who? I don't know. Joey's yelling at me, folks. What 2 things are moving the markets? This is one of them. What's the other thing? What's the 2 things that are moving the market? GE was upgraded to a buy today. Paul, I'm going to keep my eye on that. That's not one of the stocks that we're going to look at from the news perspective, but we'll look at that. What 2 things are moving the market? Not the Jockey Club, Jay. News, price action, still not the 2 things I'm looking for. How about I'll help you out. The 2 things that are moving the market are interest rates and the trade deal. Interest rates and the trade deal. All right, 2 things moving the market, the Fed and earnings per share. The Fed, I'll go with the interest rates and the earnings per share. News-wise, not it. The 2 main stories that are in the market, moving the market, are the Fed as far as the interest rates, what are they going to do with interest rates, and the on and off deal with the U.S. and China. Man, and tweets will move it. You're right, Jay. Tweets will move it. All right, so The Fed is expected to hold rates steady and vow to keep short-term lending markets stable. That's important because if interest rates are steady, if interest rates are in line with where everybody wants them to be or thinks that they should be, that bodes well for the market. The Fed is expected to conclude its December meeting on Wednesday, which was yesterday, by signaling it remains on hold for the time being and is monitoring economic developments. I did see some information come out yesterday, Nick. A story said that they were not going to raise rates for the year of 2020, which is kind of preemptive. They don't know what's going to happen in 2020, but as of right now, they're saying that they're not going to raise rates in 2020. Does that mean that rates won't continue to fall in 2020? We don't know. The Fed's job, in case anybody doesn't know it, the Fed's job is to look at the economy, look at jobs, and look at inflation. As long as they are intact, they shouldn't have to do anything with interest rates. You will normally raise interest rates to slow down a thriving economy. And when an economy is not moving and you want to spur it on, you lower rates to generate the economy to keep it moving. So with the economy doing the way it is right now, we're still at unemployment lows. A lot of people are working. A lot of people are participating in the job market. And inflation is at a level where it is still manageable. Keeping all of that in time or in perspective, we shouldn't be lowering any rates anymore right now. But there is pressure for the president to continue to lower rates so we can still remain the best economy globally. And a lot of other economies are going possibly into some recessionary mindsets, but we're not, because we have a thriving economy and everything is good. And I heard stories that we're looking to try to go into negative interest rates, which I think is kind of silly. I never thought that in my time of living on this earth, that we would have anybody ever say that we need to go to negative interest rates. I know that we want to stay better as far as an economy than anybody. We already are. So that's my 2 cents. That's my 2 cents. Glenn, I tend to be a buy and hold guy. Think about Microsoft, AutoZone, and HIIG. Any thoughts? We'll take a look at those, Peter. I'm writing those down because at the end of this presentation, I will look at individual stocks for you. All right, Microsoft, AutoZone, and HIIG. All right, so it's HIG. HIG. Stop saying them wrong, Joey. It's HIG. So I'll take a look at them. If I buy you a Peloton for Christmas, will you use it? Wow. You trying to say I'm fat? But yeah, if you do, I'll use it. Right, Joey? Yep. Yeah, there we go. Sure. We'll keep it here. Me and Joey needs it more than I do. We'll keep it at my house. No, why are you going to keep it at your house?
It'll be like both of ours.
No, it'll be both of ours, but here.
I'll keep it at my house.
No, you ain't keeping it at your house. All right, but yeah, I would use it. I would definitely use it. All right, so keeping this in mind, let's go see what else is on the other side. So we see that interest rates are looks like they're going to be pretty stable for the year going into 2020. And then the next story, U.S. and China trade negotiators planning for a delay on December tariffs. That's huge. All right, that's really huge, because if the tariffs go into play, and I think it's on December 15th, if they go hit, a lot of stocks, a lot of companies are going to be adversely affected by it. So they are planning for a delay. That'll be good. And I also saw within this story that China is picking up their imports of soybeans, which is a good thing too. U.S. and China trade negotiators are laying the groundwork for a delay of the fresh round of tariffs to kick on. There it is, on December 15th, which is just a few days from now. Officials on both sides said as they haggle over how to get Beijing to commit to massive purchases of U.S. farm products on which President Trump is insisting for a near-term deal. So the president is saying, you want to come to the table? We can come to the table. We can take the tariffs off the table, but you got to commit to buying some of our stuff. And another story came out about the China market, or the Chinese government was increasing their orders of importing soybeans. All right, so now let's take a look at that. Let's get back into the software. How do I want to do this, Joey? I go into the software here, and I want to go into my watch list. All right, let's take a look at the stocks that we look at for timing the market. We're going to look at the VectorVest composite. And for those of you who do not have the VectorVest software, another way to look at it is to track it against the spiders, the SPY. So all I'm going to really do is look at them on a graph, right click on those two, view the stock graph. Let's move that over. Look at that VectorVest composite moving up. Here's a 20-day exponential moving average on the VectorVest composite. A general rule of thumb, when the composite is above the 20-day exponential moving average, it's a good time to be in the market. When it's below, it's a good time to be out. Currently, we're nicely above the 20-day exponential moving average and moving higher. In the other indicator, the SPY looks pretty much the same. Remember, the spiders or the S&P 500 tracks 500 stocks, whereas the VectorVest composite tracks the movement of almost 8,300 stocks. There is a difference. There is a difference. So you guys are still talking amongst each other. My wife said she would. Wow, alrighty then, I'm going to leave that alone and keep on moving. All right, so both indicators that we use for timing the market, the spiders and the VVC, are both moving up nicely. So there's the news that you would have on what's moving the market from the market overview. See if you have any questions. You like more questions, call VectorVest. B1 Doc, who is that? Man, Badger's jumping over somebody. Who is that? Somebody. All right. If there's no more questions, I am going to keep moving on to the next story. All right. Now it's time for the next story. Let's go bring up the next story, which is on gold. How many of you guys are still trading gold right now? How many of you are still trading gold or are trading gold right now? Type a yes in the room. All right. Or I'm just curious to know before I get into this story, because gold looks like it might be on the run again. All right, looks like gold could be on the run again, but we're going to take a look at it. Gold prices settle higher, and this was on yesterday. Gold prices settle higher, then seesaw as the Fed stands pat on interest rates. So this is now piggybacking off of the two stories that I just talked about for the market, interest and the trade tariffs. The Fed stands pat on interest rates, but gold, that may or may not be good for gold. Let's scroll down a little bit. Gold prices settled higher Wednesday, supported by uncertainty about international trade policy, then seesawed in electronic trading after the Federal Reserve left its benchmark interest rate unchanged, as expected. After the gold futures settled for the session, Fed said it would leave its short-term rates fund at the range of 1.5 to 1.75. All right, now let's take a look at gold as a whole. So interest rates are going to have a bearing on gold, right? Let's go take a look in my watch list. All right, let's take a look at all of the stocks that I wanted to take a look at. I'm going to hold off on one. We're going to start with Sibanye Gold. That's number one. We're going to go to Kirkland, which is here. We're going to go to AXU. And then we're going to go to HMY. These are all stocks within the gold industry, some of the ones that are the more popular. Let's analyze them real quick. Remember, especially if you're brand new, there's a lot of ways or very succinct ways that we can analyze a stock in less than 30 seconds to give you better information on the stock. Every stock in our database gets a value, what we feel the stock is currently worth. I can see that Sibanye Gold is trading at $9.26, which is below our value of $13.16. How do we give a value? Well, we look at things like earnings. Remember, earnings is the engine that drives the stock's price higher. So we look at things like earnings. We look at things like earnings growth rate. And when you're looking at the earnings from VectorVest, they are forecasted 1 year out, 12 months out. Why is that important? Because I want to see where earnings should look at this time next year. So when I'm looking at the earnings per share on Sibanye, it's at $1.16. We're saying by this time next year, it should be at $1.16. This gives us an understanding as if earnings are rising or falling going into the next year. So first thing, Sibanye Gold's undervalued. Kirkland, undervalued. Right now, there's two gold stocks undervalued. Alexa, not Alexa, not the same Alexa you talk to. Hey, Alexa, no, same, wrong thing. This is Alexco Resources, undervalued, and Harmony Gold, undervalued. Now, let's look at some of the proprietary indicators that separate us from everybody else. RV, the stock's long-term price appreciation potential as compared to a AAA corporate bond, which is an alternative investment. Based on a scale between 0 and 2, where above 1 is favorable, below 1 is unfavorable. RV on SBGL or Sibanye Gold is at 1.41. What we're saying is over the next 1 to 3 years, Sibanye Gold should be able to outperform a AAA corporate bond by 41%. Long term, this is a stock that I would want to have in my portfolio. Kirkland Lake at 1.66%. This should outperform a AAA corporate bond by 66% over the next 1 to 3 years. Long term, I want this in my portfolio. So right now, all of these stocks have an RV very nicely high above the value of 1. It's telling me that long-term gold may not look so bad. Now, even though they're looking good long-term fundamentally, all that means is that there are some bad times to be in good stocks. So fundamentally, upside potential is there. But if the stock is pulling back or the industry is pulling back, it may not be the right time to be in those stocks. Next indicator, relative safety. It's an indicator of how risky the stock is. RS looks at the stock's consistency and predictability of financial performance. Does this company meet or exceed earnings quarter over quarter, year over year? So again, on a scale between 0 and 2, below 1 is unfavorable. Sibanye Gold, the safety of the stock is not as good as probably some of the others. Kirkland, though, has a good safety at 1.21. It stands a higher probability of when earnings comes out that this stock should meet or exceed earnings. Alexco, below 1, unfavorable. Harmony, just barely below 1 as far as the safety is concerned. Relative value and relative safety are our fundamental indicators on the stock. Relative timing. That is our technical indicator because technical analysis is based off of 2 things, price and volume. Price and volume. Cliff just bought AK Steel. We're going to get into that in a second, Jay. We're going to get to that in a second. All right, what stocks are in an uptrend? Well, gold, Sibanye is up at 1.81. Stock is definitely moving higher. Kirkland, even though the fundamentals are good on the stock, it's not moving up right now. So this tells me long term, I want to own the stock. Right now is not the right time because the stock is in a downtrend below the value of 1. Looking at Alexco, good upside potential. The safety is not there as far as meeting or exceeding earnings, but the price is in an uptrend right now. Harmony, good upside potential. Safety right about that 1 level, but the stock is in an uptrend right now. Last thing I want to look at is the earnings growth rate. These companies have positive earnings. All right, they all have positive earnings, but I want to see how fast they're growing their earnings. And that's what this GRT is, earnings growth rate. Sibanye is growing their earnings at a clip of 23% a year. Kirkland growing their earnings at 31% a year. Alexco, 38% a year. Harmony, 29% a year. Notice that all of these companies are growing their earnings, but sometimes, especially based on RT, the stock may not be in an uptrend right now. Fundamentally sound like Kirkland, just not moving up right now. Now, one thing, as you may be new to this, if you like the information that you see here, especially to my new people, don't forget to comment, like, and subscribe. Don't forget to comment, like, and subscribe. All right, wanted to take a break and say that for you real quick. Now, all of these are highlighted. We have a buy recommendation on Sibanye, hold on Kirkland, buy on Alexco, and a hold on Harmony. Let's right-click, view the stock graphs. Let's take a look at them real quick. 20-day exponential moving average, going to put them on a 3-month graph. Sibanye moving up. Today, not the day to buy it. Why? Because I have a red bar, a red candle pointing down today. So today, not a good day, but overall, look at that nice upward trend on Sibanye Gold. Kirkland doesn't look nearly as good as Sibanye. Did break above that level of the 20-day exponential moving average and broke above a level of resistance today, but pulled back. Not the right day to buy it as well. Man, Alexco, big red bar. That is a dark cloud cover. That was there as well with follow through. Let's see what happens with Alexco tomorrow. Big one, Harmony. Again, big down day. So even though these stocks, the only stock that I really like out of this group was Sibanye, That is the one that's outpacing all of the other stocks. So this is a good way that even though gold is in the news, to cherry pick down to the ones that look the best in that space. Now, talking about that space, I'm going to look at a couple of other things here. XBI, oops, that's not what I'm looking for. Nope, that's it. So that was my fault. Joey's going to have to edit that out. All right. That's it that I've got on gold, and I do like the Sibanye gold as a play as opposed to all of the other ones. Anybody got any questions? All right. Please do not say Alexa. Oh, boy. Hey, Jake, didn't, blah, 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 blah. All right, you guys are more so talking amongst yourself. That's fine, just as long as I'm getting across what needs to get across. And if you're not asking a question, that means I'm getting across. Paul says, I love gold. The look of it, the taste of it, the smell of it. Oh, boy, Paul. That's a little bit more. This was just looking at gold stocks, not the actual gold. Good Gordon Jim. All right, let's go to the next story. So we'll do that. This is what Jay was talking about. Jay asked the question, didn't Cleveland Cliff just buy another company? What was it? Ta-da! Here it is. Cleveland Cliff to buy AK Steel in $1.1 billion stock swap. Good. Gordon Jin. Deal would add steel products to one of the largest producers of iron ore pellets. Good gravy. Cleveland Cliffs agreed to buy AK Steel and $1.1 billion stock swap that adds steel products to one of the largest producers of iron ore. This is a big story. Cleveland Cliffs said Tuesday it would swap 0.4 of a share worth about $3.36 based on Monday's closing price of $8.41 for each share of AK Steel. Like Scrooge McDuck swims in what are you saying, Joff? Good gravy. All right, so let's go talk about that. So Cleveland Cliffs to buy AK Steel. There were some stocks that I wanted to look at besides just AK Steel in my list. So here's AK Steel. What else is in here? RYI. Click on that. GGB. I want to also look at SID. Boom, and CRS. All right, these are all in the in the steel industry, but the big story is on AK Steel. Let's analyze them. Ryerson's undervalued. Campagne undervalued. Girardeau undervalued. AK Steel way overvalued, but the stock's price jumped up as compared because it was getting bought. And Carpenter Tech CRS undervalued. Now, RV, good RV on Ryerson's, above the value of 1. Better RV on SID at 1.5. Girardeau, GGB at 1.08. Again, all three above the value of 1. Good long-term holds, with the best one being SID. AK Steel pulled back a little bit because it's under that process of being bought. And look at that, Carpenter Tech also at 1.41. Relative safety on these stocks in this industry, not nearly as good, but Carpenter Tech has got an RS above 1, whereas the others do not. Now, let's talk about what's moving. Well, the industry is on the rock and roll. Well, how do I know that? How about Ryerson? Really above the value of 1, good uptrend. SID, good uptrend. GGB, good uptrend. Even AK Steel, good uptrend. Carpenter's uptrend not as significantly as high as the other RTs. 1, 2, 3, all of the stocks are buy recommendations. They all have good earnings, but watch AK Steel, negative earnings. Again, it's gotten hit. It's gone up, but gotten hit because it's under Cleveland Cliffs getting bought. All right, let's look at them on a graph. View the stock graph, move that over. There's AK Steel, put on a 3-month graph. Look at that run up. Nicely running above the 20-day exponential moving average. Also broke through a level of resistance on, I don't like the crosshair cursor. I hate the crosshair cursor. On 12/3 of 2019. So broke above. I'm going to put earnings per share on here. Earnings was falling. Let's go put that type as an area. There we go. Earnings was falling, but the news behind that the stock is being bought really catapulted. Wow, thank you, Joey. Catapulted the stock.
Caterpillar.
I was going to say Caterpillar.
I had no idea.
Good gravy. All right, so even though the earnings per share was riding down, stock was in a channel. Normally when that happens, the stock's price will tend to fall as earnings was falling, as it breaks out of the channel. But this was news driven. This was news driven as the stock's price started moving up. Let's go look at RYI. Keep your eye on RYI. The industry is moving up. Watch the earnings per share. Not really feeling real comfortable with that. The stock is stopping at a level of resistance, but clearly above the 20-day exponential moving average. If I own that, I'm going to put tighter stops, especially knowing that the earnings per share is trending lower. Look at that, all of them. GGB, Steel Basic, nicely moving up. The industry as a whole, the stocks within the industry are moving up, but look at the individual earnings per share. Be careful with those, because if earnings is the engine that drives the stock's price higher, what do you think falling earnings does? All right, so the stocks are still moving up. Be careful, especially knowing that the earnings per share is falling. Now, SID, on the other hand, nicely moved above the 20-day exponential moving average, broke through a level of resistance residing at $3.11. Breaking through, moving up, rising earnings. This is more of the stock that I would look at in this space. This is what I'm looking for on the stock moving in this space. All right. Nicely, stock became a buy recommendation. I like the move, especially following earnings moving higher. Same thing with CRS. Recently, today, just broke through its level of resistance at 53.86, rising earnings, a little bit of give back as far as a wick at the top. Buy recommendation. I would just make sure that if I buy into the stock, that it's moving 12 cents higher than the high. All right, so those are my steel stocks. I do like a couple of them, but this is a good way of looking at the stock that made the news and looking at the other stocks within the industry to hone in on probably the better stock within that industry. Any question? Any question? Paul says unusual auction activity on MLCO. You know I don't do any options in here, Paul. MLCO, I write it down though. Scrooge was McDonald's uncle who loved gold. And, oh, is that what you're getting to with that? I was like, what are you talking about? What did Badger type? Badger said steel is number 7 with a bullet in the top RT industries. I'm going to get to that in a second, too. You guys are trying to steal my thunder. I got some surprises for you today. Let's go to the next industry. All right, let's go to the next story. And how many of you have been noticing that the biotechs have been moving? How many of you have been realizing the biotechs have been moving? Anybody want to say yes, they do know that? As I drink from my Duke coffee cup? Don't be a hater, Joey. Over the last couple of weeks, the bio companies have been moving. So I wanted to keep my eye on some of them that were moving up. I didn't want to pay attention to the ones that were moving down, but the ones that were moving up, I wanted to take a look at them, all right? So healthcare top 5 gainers. I've got these stocks in my watch list. Let's go take a look at them. NLTX, let's go find it. NLTX, let's go find CDMO. CDMO right there, let me move this over a little bit. So I'm looking at some popular stocks that are moving up in the drug biomedical field. KNSA, EQ. Where's EQ? There's EQ and ITRM. All right, let's take a look at these real quick. It's hard to really peg pharmaceuticals. Most of them are going to be overvalued. Excuse me, a lot of that is because there's a lot of stuff that goes into research and development for these drugs. They put a lot of money behind it, and people anticipate that the drug is going to work, so they are willing to pay a premium to own the stock. So most pharmaceutical drugs that you will find in the company will exhibit those characteristics of being overvalued. So NLTX, overvalued. CDMO, overvalued. KNSA, overvalued. Equilium, overvalued. And here's one that's undervalued, actually ITRM. All right, so let's go take a deeper look. Excuse me. And ARQL, I'll keep my eye on that as well. Remember, all of the stocks that I'm looking at are stocks that have made the news for one reason or another, and I'm also looking at the stocks that are in that industry. All right, RV on the stock. Wow. NLTX, not a good long-term play. RV, the upside potential as compared to a AAA corporate bond, not there. CDMO, not there. Kinsa, not there. All of the stocks long term, and that makes sense when it comes to the pharmaceutical companies. All of the upside potential on these stocks is not there. These are not stocks that you want to hold long term. I'm going to bypass the safety because both on those, they're going to be below 1 as well. What am I most in looking at as far as when it comes down to pharmaceuticals? If they're in an uptrend. So NLTX, 2, pegged as high as it can go. It's moving as fast as it can in the software. How about CDMO, 1.73, KNSA, 1.83, EQ, 1.32, but ITRM not moving up nearly as fast as the other ones. Look at the earnings. Negative earnings, but growing their earnings at 5%. Just barely making earnings positive as CDMO, but they're growing their earnings, interestingly, at 28% a year. KNSA, negative earnings, and they're growing it in a negative fashion. EQ, negative earnings, growing it in a negative fashion. ITRM, negative earnings, growing it in a negative fashion. A lot of this, what you see, is germane to what goes on with biopharmaceutical stocks. A lot of it is based off of what the FDA is going to say or not say in approving the drug. Good afternoon, Marie. Glad that you're here. All right, let's right-click. Let's view the stock graph. Let's take a look at these graphs real quick. Put this on a 3-month graph. Nobody's asking me why do I look at a 3-month graph. I always look at a quarter on the graph. The last 3 months, that gives me more than enough information that I need to look at. NLTX, look at the big pops. Look at the give back with a big wick at the top of the graph or the top of this candle, pulling back right now. Be careful with a stock like that. But overall, what is it doing? Moving up. What did it do for 4 days, 5 days? Pulled back and started going back up again. The industry is hot. CDMO moving up above the 20-day exponential moving average. How about they just went positive in earnings? That may not be a bad play. But today, look at the big wick at the top. A lot of selling pressure on CDMO today. Looking at Kinsa, got to a point almost of positive earnings, pulled back a little bit more, retracing from a level of resistance, but still above the 20-day exponential moving average. Next one, EQ, above the moving average, closed green candle today, not the right day to buy. And if you're going to look at buying into any of these stocks, make sure that they take out their swing highs. Looking at all of this, even though they've made the news, make sure that if you're going to get into them now, make sure you get into them after they've taken out the swing highs. The last one, ITRM, not nearly as comfortable with this as I am with the other ones. Recently went above. Why? Because the industry was starting to pull them up, right? Industry was starting to pull them up. Now, that's the stocks. I took this a step further, and I looked at the industries to track these by way of an ETF. First ETF is LABU. It's a triple leverage ETF. And my next one was XBI. That is the Spiders Biotech non-leverage to track or play these stocks. Let's go look at the stock graph. So LABU, which tracks all of the biotech stocks in one ticker symbol or one ETF, look at that. Put this on a 3-month graph. This is the easier, non-riskier way to play the whole industry. Now, this is a triple leverage ETF though. As it's going up, you're making a lot of money. If it pulls back and you're on the wrong side of it, you're going to lose a lot of money real fast. Even though it was moving up, what is it doing right now? That industry is pulling back a little bit, still above the 20-day exponential moving average, but pulling back a little bit. If you're still holding these stocks, wait, let it come to you. If you're not, wait before you go and buy any new shares. And the next one is on the XBI, which is the non-leverage biotech sector as an ETF. Doing the same thing as the triple leverage. So even though they were moving, you saw a lot of these stocks had not a good time to get into them. I'm bringing up the industry or the stocks that were moving, but I'm keeping you on top of. Maybe it might have been, might be time for you to think about taking half off the table or pulling the trades off. All right, so that was to go along with the nice movement on these bio stocks. Anybody else? Anybody have any questions about this? So Jake asked, why do I look at a 3-month graph? Again, it's because I always like to look at least a quarter of each stock. Why? What happens every quarter? Stocks report earnings. So when I look at a 3-month graph, I'm looking at the earnings already incorporated in the graph. That's why I look back 3 months. All right, let's go to the next story. Let's close this out. Let's go to the next story. Next story is, big story here. New York Life in talks to buy Cigna for $6 billion. Can you say billion? Can you say billion, Joey?
Billion.
There you go. Not million, billion with a B. Wow, that's huge. Cigna is a big company. New York Life is in talks. In talks. So it's not saying that it's being bought. They are in talks. How many people knew about this? That's a big move. That's a big company when it comes down to healthcare.
That's what we just got.
I know, that is what we just got. We just got here at VectorVest. That's big news. All right, that is big news. Glenn, I don't care what Joey says about you. You're pretty smart. Wow. Joey, do you tell people bad things around behind my back? Wow. Thank you, Kev. Thank you for looking out for a brother. I appreciate that. Joey, you're fired. I couldn't do any of this without Joey, Kev. I couldn't do any of this without Joey. So Joey can talk bad behind my back. I know he doesn't. He might, though, but I know he doesn't. He might, though. All right, other potential buyers include MetLife and Sun Life. It looks like everybody's going after trying to buy Cigna. Cigna's big, folks. Big, big, big. All right, let's go back into my list. I put up some healthcare stocks, big ones. All right, Humana is one of them. Cigna, there's the story on Cigna. I also wanted to look at WCG. Where's that at? You see it, Joey? Oh, there it is, at the top of the list. And United Healthcare. Notice that these stocks, by way of VST, these healthcare stocks are at the top of the list. How about that? Did someone say trade deal, Glenn? Did they say that they're going to do it? Did anything just come? U.S. China meet the deal. Is that what happened? Or is that news? Did that just happen? Did somebody tell me? Did they just cement the deal? Are they going to hold off on the December 15th tariff? Anybody? Is that what you're telling me? Yes, says Rich, Trade Shark. Nice. Now that's going to make the market look good for the rest of the day. So I'm going to go take a look at that in a second. That's awesome. Not cemented, but coming. Huh? U.S. makes tariff cut offer to China as tariff deadline nears. Thank you. Thank you. Joey just brought up the story. How about that was right on point? Thank you guys for bringing that up. That's what Trending Thursday is all about. And guess what? In the beginning, when we talk about what's moving the market overview, China trade deal is part of it. And having that news real time as we're going through it, that's awesome. All right, let's go take a look at these healthcare companies. Let's view the stock graph and move this over. Man, look at Humana. You know, people gotta have healthcare, right? Humana, is that my belly? Man, moving up nicely above the 20-day exponential moving average. But what's going on with it? Moving sideways. Love the earnings per share on Humana. All of these should look good. Cigna, though. Cigna, earnings look good. Stock is pulling back below the 20-day exponential moving average. Right now, out of these two stocks, Humana is the better deal. Looking at WCG, pulling close to its 20-day moving average. Looking at that, Humana is the better deal. Let's go to the last one, which is UNH. UNH is a good deal, too, pulling away from the 20-day exponential moving average. But all of these healthcare companies have the same thing in common. They're all moving up as far as earnings are concerned. All right? All moving up as earnings is concerned. So that's what's important. All right, anybody got any questions in regards to that? All right, so now I am going to do a new segment. In the new segment, I haven't really named it yet, but why you make your face like that? All right, it's going to be called I haven't named it yet, but it's in the Unisearch tool. If I do that, that'll work. It's in the Unisearch tool. I've got a new search that I created in Trending Thursday. It is, for me to get the news stories that I do, Trending Thursdays, industries, what I've done is I've created a search, a delta, on industry RT. All right, I'm looking at industry RT. I put a delta, a 30-day sorted delta on industries, RT. So when I run it, I'm going to see, excuse me, over the last 30 days, what industries have increased the most by RT. Steel. Well, that's why I had the AK Steel story in there. Petroleum drilling. Now you're going to ask me, well, why didn't you do petroleum drilling if it's got 56% turn on RT over the last 60 days, or last 30 days? Let me show you why. Huh? Nobody, listen, what am I supposed to do, Joey? You won't let me change the resolution. All right, fine. Layout. You didn't tell me that I could do it, so I'm not doing that. Let's go change that. Let's make that a little bigger. Let's go bump this up to about 16. Oh, you want to see it? Oh, we're going to see it now. Oh, now you want to see it, Joey? It's a little, now we can see it. Let me run this again. So the big thing here is someone's going to say, well, you went with alloy, steel alloy. Well, why not petroleum drilling? Let me tell you why. And I'm looking at industries right now. If I right-click on petroleum drilling, view the industry graph, was I really willing to play the petroleum drilling industry right now? Put it on a 1-month graph. All right, sorry, put it on a 3-month graph. There we go. I wasn't really ready to pull the trigger on petroleum drilling. Look at the earnings per share on the industry. It's just moving up above the 30-day, moving up above a level of resistance. It's got another level of resistance to get to. I need more confirmation. I needed to break at least above this level of resistance at 539. Not ready to pull the trigger on that industry yet, which is why I didn't use that one. We did use mining, right? We talked about mining. We did talk about healthcare, HMO. So a lot of this, I looked at the industry groups to see what was moving up nicely, and then found the news stories associated with them. All right, so this is a good way of me trying to find my stories for the week, looking at what industries are moving up the most by RT. If you're not a subscriber, you don't have this access. But as a subscriber, this is a new search that I created so we can always stay on top of what the biggest industry. This is Trending Thursday, right? I want to see what's trending. This is a good search from an industry perspective to see what's rocking and rolling. So then I created one more. Trending, I don't want to change that. Trending Thursday breakout industries. So now I'm still looking back 30 days, but now RT on the industry 1 week ago was below 1. The RT on the industry this week is above the value of 1. Now I'm looking at breakout industries by way of relative timing. Steel alloy at the top of the list. Drug biomedical at the top of the list. Mining gold, silver at the top of the list. Voila. These are the stories that we did this week. Does that make sense? All right, does that make sense to you guys? And as a subscriber, you can do this on your own at all times to see what's trending before it even hits the news. Does that make sense, y'all? All right, I can see Steel Ally. RT below 1 last week, now above 1. RT up 65%. Are these searches only available to you? Kev, I created them, but I have them shown up here that you can create them on your own. I'm going to show you where you start off building these searches. Go to Delta Searches Industries. Go to Delta Searches Industries. Once you've done that, I looked at a 10-day price delta on RT. I highlighted that. I changed the value, and I made it a 30-day value, and that's where I started, and that's my first search, which is the Trending Thursdays Industries. That's the first search. To make the second search, what I did is I went 1 week ago, industry, RT, less than 1, less than or equal to 1. And this week, or time of search, industry, RT, greater than or equal to 1. That's how I made the second search. So there they are right there. That's it in a nutshell. This is all about Trending Thursday. I wanted you to get an idea of how to use the power of the VectorVest software to create your own industry search to see what's moving. Now, when I can look at an industry, breakout industries, let's go back to breakout industries. If I go out to breakout industries, which was the 30-day delta on RT, RT of the industry 1 week ago less than 1, this week above 1, and run it, now I can look and find out what stocks, look in steel alloy, right click, view the stocks in that industry group, right here, view stocks in that industry group. And then I can look around and see what stocks are making the news. All right, what stocks are making the news? Drug, biomedical, machinery. But how about this as a way, from a trending perspective, to use the power of the software to see what's trending? Mining, gold, silver. You notice that we were looking at petroleum before? Do you see petroleum here? When I'm looking at the industries going from RT below 1 to RT above 1, you see petroleum here? This is another way of saying, well, petroleum shows that it's up at the top, but is it? This is a way to confirm that the industry is really breaking out, folks. This is a good way to see if the industry, this is only due to you being VectorVest subscribers. If you're new here and you're not a subscriber, we do offer a trial for $9.95, 99 cents, 99 cents. All right. This is some of the power that you have within the software. This is some of the power that you have within the software. Hey, only 5 folks have liked this video. Please like, wow, thank you. Wow, you see that? That's Tom. Huh? Did you really? Wow, way to go, Badger. Wow, look at that. Joey just made you an admin. Look at that. All right. So now I'm going to take a look at some of the stocks that you've been typing in the room. That's a new segment. I haven't named it yet, but I'm going to do that every week so you guys can stay on top of what industries are at the top of the list a little differently. How about over the last 30 days? And number 2, looking at what industries are really popping by way of the use of RT.
I like what Saborem said. He said, showing us how the trending Thursday sausage is made.
This is how and actually that is the way that the trending sausage is made. The trending Thursday sausage. I have to find out what industries are moving, and then I look at the news of the stocks in that industry. All right. No, IMPUI. All right, let's go take a look at some of your stocks. I've got a list. Hold on, Jay. Don't type new stocks yet. Stop. All right, stop. All right, let me start off. I got GE, FED. Is that what you, no, not that. GE, Microsoft, AZO.
What are those from?
These are stocks that have been typed into the room since we started. I just wrote them down. I figured you would have done it, but you didn't. So LU. You have been busy. I can't deny that. IMPUI. Now I'll look at that. VMD.
COO.
That's not right.
It's not?
No. All right. COO. SKY.
Coca-Cola.
KO.
SKT.
Huh?
SKT.
SKT. Why don't you speak English?
AMRX.
AMRX.
IMPUY.
I already got that.
ADI.
ADI.
AUPH.
AUPH. That's it. That's all I can get. That's a lot of stocks. That's a lot of stocks. All right, put these all in a 3-month graph. These are your stocks. We're gonna do them on the fly. I got about 5 minutes left. Let's fly. What are we gonna call? What I should call this? Stocks on the fly. You like that?
Stocks on the fly.
Stocks on the fly. He's gonna put this in the video as stocks on the fly. All right, you gotta do something with that though. You gotta do something with that. All right, so we need to create these searches ourselves. Peter, for the time being, yes. Which is why I put them up and I walked you through how I built them, Peter. I walked you through how I built them because I knew that question was going to come up. You don't have them, but I walked you through how I built them. They weren't very difficult to build. All right, they weren't difficult to build. All right, and if not, I'll do it every week for you, Peter. I really will. Or when the video comes out, take a look at the video, and again, it will walk you through how to build them. All right, GE, they bring good things to living, they bring good things to life. Another something new that we have here, we have earnings now. I'm putting out a video. Joey's working on it right now. It's a new update, and you can see where the earnings are on the graph. How cool is that? I wanted to see was today's part of our earnings play. It was not. which is fine, but the stock is above the 30-day weighted moving average. Roku having fun at, with 145 puts. All right, I got to do this real quick. ROKU and CC, which was Rich thing, CCXI. All right, no more stocks. I can't, or else I'll never get them done. I'll never get them done. I used to work in the alarm industry. ADI was a big company in the alarm industry. I'm wondering if that's the same ADI that I know of in the alarm industry. No, Marie, I can't put any other stocks. I will never get them done today. I'll never get them done. I just can't. So I did put in that Roku for you, though. All right, let's take off the last close. Stock was a little bit in a sideways move. Broke out today. Watched a big wick at the top. If I'm not in the stock right now, I'd wait till it goes at least 12 cents higher than the high. If I'm in the stock right now, it's above the 20-day exponential moving average, it's fine. Ademco is in Long Island. I know, I know that, Jay, only because, again, I was in that industry for 13 years. Ademco is in Long Island. So is NAPCO. NAPCO is in Long Island, too. I still know a lot of the nomenclature behind that industry. Be careful with ADI. All right, be careful with ADI. Watch the give back or the big wick at the top. But overall, over the last 3 months, back and forth above and below that 20-day exponential moving average. Let's go to the next one, AutoZone. How does a company that sells auto parts trade at $1,230? It gapped up. There it is. Boom. Look at that earnings play. Look at that earnings play. This is the benefit of having that in the software now. Look at the earnings play. The stock's price shot up. And what happened after that? I think this is a little bit of profit taking. Earnings did well. Good earnings play. It did well. Pulled back on the day of earnings, and now it's following through with more pullback. Let's see if it's going to fade the gap. If you own the stock and it starts to fade the gap, be careful. There's the level of the open 2 days ago. If it does fade this gap, folks, it's got some downside potential. It's got some downside potential. Just be careful with that, all right? Just be careful with that. I do like the earnings play, though. Let's go to the next one. Wow. Cooper Healthcare, whatever. Big up day. Earnings on here. Earnings was a few days ago. But nice bump up above that level of the 20-day exponential moving average, moving over to a new buy recommendation. If I don't own the stock, man, it's at 312. What's the level of resistance sitting at? The level of resistance sitting at 318. I got a chance. If I get it now with 12 cents higher than the high, I can make about $6 on it. All right? I'm not going to tell you not to take it. But that's a good profit target right now if you do get into it at 318, because that's the last level of the swing high and it needs to break through. Or if you do get into it, you can take half off the table once it gets to that level. All right, don't give it all back. You can use half of it once you get to that level. Let's go to the next one. GE, we did look at. It is currently above. A little bit of an island play, a big jump all by itself. Not an earnings play, but jumped up. It's just sitting out in no man's land right now. Between that level of the high and that level of the gap up, be careful with that. It could go either way. Let's go put on earnings. Why don't I have earnings on here? Now I do. Let's go put this as a area. Earnings is rising. I do like the idea that the stock's price is rising. The stock was in a channel between that level of resistance and a level of support. Rising earnings, the stock is going to have a higher probability of breaking out. All right, so there we go. Why 12 cents? Peter, because it's about 1/8 of a point. It goes back to the early days of trading. A good look for getting into a stock was about 1/8 of a point, which is about 12 cents. All right, but if the stock is about $15 or lower, I'll look at about a 5 cent above the high to get in. All right, so there you go. Does that make sense, Peter? It's a way of making sure that you're buying into a rising stock. And on a higher dollar stock, 1/8 of a point is 12 cents. I'm making sure I'm buying into a rising stock. I'm not going to put 12 cents on a lower dollar stock. It's too much of a move. All right, let's go to the next stock. ARQ, this was bought. Somebody said that this was bought. Another drug biomedical company was bought. Right now, if that's the case, I probably wouldn't touch it. There's not a lot of movement on the stock right now. HIG, Hartford Insurance. Love the earnings per share. Stock's moving a little bit sideways. Look at that level of resistance, a good level of support. It's breaking through resistance today. I like that. I'd still go 12 cents higher than the high. I'd look for more confirmation of a full bar above that level of resistance. I'd look for a full bar above that level of resistance. All right, there's another buyer in the shadows for ARQL. Thank you, Trade Shark. I appreciate that. A little bit of a sideways move, but enough news that's pushing it higher than that level of resistance. I got another level of resistance at the 3-month high. I really would like to see confirmation of a full candle above. You keep missing, that's why you need to buy puts for protection. Look at that. You guys talking to each other. And you know something? Don't be afraid on the stock that you own to protect it. Hedge it. And puts are a good way to do that. Microsoft, love the equity curve. Moving up nicely above the 20-day exponential moving average. Love the earnings per share. New 3-month high today. Have a good day, Brian. Have a good day, man. I love that it's above the 20-day exponential moving average, hitting a new high, 12 cents above the high. Stocks that tend to move. There's a law. Law says whatever's in motion tends to stay in motion unless met by an equal or opposite reaction. Something like that. That's the law of something. Can somebody help me out on that? Well, anyway, nice 45-degree angle on the stock. Stock is going to have a higher propensity to move up higher. But do keep in mind, it does have a level of resistance that it just broke through to create that high. Let me make that a little darker. Make that a little darker. It did create a level of resistance. It broke above. Still 12 cents higher than the high will put you higher than that level of resistance. All right, let's go to the next stock. Woo, Sky. Was in a channel. Look at that rising earnings while it was in the channel. What did the stock's price do? Rose. Again, great opportunity to watch stocks in the channel. Make sure that the earnings are rising. It's going to have a propensity to keep moving higher, and it did. Right now, though, from that high, pulling back, still above the 20-day exponential moving average. Love the earnings per share. If the stock's price breaks below that 20-day exponential moving average, you might want to consider taking half of the table. Is it Newton's law of motion? That's what it was? All right, thank you, Naresh. It is Newton's law of motion. Whatever is in motion or it will stay in motion until met by an equal or opposite reaction. Something along, I probably said it all wrong, but at least you knew enough of me, knew enough from what I said to know. Right now, though, this stock is pulling back from the high. This is my level of where the rubber meets the road. Let's see if the stock's price breaks back below that 20-day exponential moving average. Next stop, Coca-Cola. Nicely above the 20-day exponential moving average. Where is it stopping? Tom is here. Tom, say it. Type it in the room. This is why we look at support and resistance. Where is today's intraday action stopping? Right in the zone of resistance. Tom is going to type it in the room in 1 second. I do love the rising earnings, though. Earnings is the engine that drives the stock's price higher. But look at today's action. Where did it stop? Right at that level of resistance. And there it is. Tom is typing in the room. Man, this stuff really works. This is why we look at moving averages. This is why we look at support and resistance. Breaking through resistance or breaking through support is a good way to say that there's some confirmation behind the move. Again, like the earnings per share, but I really like some confirmation of getting past that level of resistance first. All right. SKT, is that one of them? SKT? Did you give me the right ticker symbol? I don't think he did. Anyway, I don't like it.
So I put in SKY and SKT, but
I'm not feeling this. Stock is in the channel, at the bottom of the channel. The level of support is holding it, though. All right, that's a good sign. It's below the 20-day exponential moving average. It's bearish. Look at the trend from the high, connecting highs. I've got lower highs. It's bearish. Earnings don't look so good. It's bearish. So let's see if this level of support will hold, or if it breaks through, it's got some downside. If it breaks through this level of support, it does have some downside. All right, let's go to the next stock. MLCO. All right, there's the earnings play right there. I don't know what made the stock move up today. I do like the rising earnings. Where is it at? Look, a big open candle. Where is it stopping? Right at that level of resistance of 2302. It's at 2279. Let's see if it can break. I don't know what happened news-wise that made this go on. And with all of the stocks that you want me to get through, I'm not going to take a look at the news. But a big open day, very little wick at the top, very strong up day today on earnings that is still rising. Let's go to the next stock, Lululemon, getting primed up for Christmas season, moving up. Now 1 day off the high, gap down. Still the body is above the level of the 20-day. And what was that? That was an earnings play. Boom. There's the earnings play. 12/11 was the day of earnings. Good, must have had good earnings. And then right after that, look at the pullback. Look at the pullback. But the body is stopping still right short of the 20-day exponential moving average. If Lululemon falls below, if you're in the stock, you might want to think about taking half off the table. You might want to think about taking half off the table. If I'm looking to get in, let's see if I can get a bounce off this level of the 20-day exponential moving average, start moving up. That could be a good early entry to get in. I still think that Christmas will pull this stock's price higher. But this could be a regression back to the 20-day exponential moving average. Let's see if it can bounce and move back up. Tomorrow might be a good day to pull the trigger early. All right, let's get to the next couple of stocks in here. AMRX, a lot of sideways move here. Man, $4.87. There's not a lot that I like about it. I know with the big move gap up today, there's a buy recommendation. But look at the falling earnings. Another biopharmaceutical, Amneal Pharma. I don't like the earnings per share. Rising earnings is the engine that drives the stock's price higher. Falling earnings is just the opposite. Nice move up. It was not an earnings play. This is where earnings was. It looks like they must have either missed earnings here. And the stock did rebound back up. But look at that pullback. And this has got to be news driven by FDA. I'm assuming that this is a news driven FDA thing. Earnings were great, but outlook at the end of at the low end of estimates. Thank you, Dennis. Thank you. All right, let's go to the next stock. Wow, I love this stock. We're in this stock in the Jockey Club. Love this stock. Look at that. Very little pullback to that level of the 20-day exponential moving average, pulling away hard now. Love the earnings per share. I talked about this in the Jockey Club last week. This was a good play. A lot of people are making money on this. A lot of people are making money on this. I got you. AUPH above the 20 exponential moving average. Not a good day to buy today. Red arrow, watch the big dip in earnings. Big dip in earnings. Here was the date of earnings, but look at that right there. Be careful with that. I'm not feeling that. It is above the 20-day exponential moving average, though. If you're in it, you're fine. Leave it alone. All right? Another thing, if you want to tighten the stop, instead of using the 20, how about using the 8 exponential? It's a little closer to the price. Will get you out a little quicker. Let's go to the last two stocks. Roku. Man, they had a deal with Apple to put the Stream Apple on the Roku device. But, man, that's not holding up. Look at the stock below the 20-day. Look at the stock is still losing money. Be careful with that. All right? Be careful with that. All I'm looking at, I don't like to prognosticate, but that's not good. All right? Look at the price action. Look at the earnings. I'm not a real fan of Roku right now. It did have a couple of days of bouncing up, but, man, look at that. It's coming back to a reality. Last stock, CCXI, gapped up. Moving sideways right now. Nice up day today. A little bit of a sideways move. Let me take off that 8. Don't like the earnings per share. It's lower than it was 3 months ago. I'm going to call that a little bit of a channel size move, but a nice update in and of itself. I'd like to see it break above that level of the high, but earnings altogether not holding this long term. All right. So those are your stocks that you wanted me to look at. Hopefully you guys learn some stuff. New people, thank you for being here. If you liked what you saw, don't forget to comment, like, and subscribe. I really want you guys to comment. Comment on the videos that are out there. Let the non-VectorVest subscribers know how you feel about the software. Tell us what you like about it. Tell us what you don't like about it. Tell us what you would like to see. Comment, comment, comment. Like and share and all of that stuff. But like it, subscribe. My biggest thing is I want you guys to comment. I'm trying to grow our footprint on this social media for the YouTube. The only way that that's going to happen is because of you. So make sure that you comment, and I try to do the best that I can to answer comments personally, especially if they come towards me. All right, what about the OMI? What do you mean? The stock, Ferris, I cannot do it today. I am 11 minutes over. I can't look at, but next week, I will do the best that I can. Make sure you come with stocks that I can look at. I try to do that every single week. I can't look at it today. Authorities fade. Fade what? You're welcome, Janet. All right, so with that, folks, thank you, Badger. Thank you, Tom, for helping us out today. I do like that Joey made him an admin for today to talk about it. All the new people that are here, again, folks, don't forget, you know, if you have a YouTube account or if you have a Facebook account, share it on your Facebook. If you have other people who like learning about what to do in the market, share it on your Facebook. I want to grow this community. So if you find some use in it, guess what? You might find some other people that may have a use for it too. Share it on your Facebook. You can share these videos on your Facebook. So, thank you very much. I'll see many of you next week, next Thursday for Trending Thursday. Roger says great stuff and great software. I've made a bunch of money on IMPUY in 60 days. I love that stock, and I love that we have that trade out there. All right, so thank you guys for being here. Have a great day. Adios, arrivederci, ciao. Au revoir, sayonara. I'm going to see many of you tomorrow. Later.